Rana Gupta is now joining us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here on the program. Thanks very much for your time. Are markets breaking out, Rana? Are we at the cusp of that sort of big break higher? Or as many local fund managers have told us, have been telling us for the last 2 or 3 weeks now, expect a tactical rally, but don't expect anything big. This is going to be very much a up and down year over and over again. So very choppy, and ultimately the result by the end of the year on a year-on-year basis is not going to be anything spectacular. Your sense, Rana?
Good morning. The view is that, given the kind of global setup that we see, rates are higher, then there are a considerable amount of geopolitical uncertainty, and the growth is going to slow down, at least in the US and the Europe. With such slowdown, and then rates still high, and the commodity prices, of course, they have come down but elevated levels. It is somewhat difficult to say comprehensively the markets are done missing out and breaking out. What we do think is that markets will consolidate within a band, and the breakout we have to, I think, wait for some more time. However, I think what is worth pointing out is that the growth rates will be very diverse across geographies and sectors. If you drill down to India, the Nifty, I think, over last 1 year has been more or less flat. But when you look at the sectoral performances, if you look at the auto, FMCG, banks, they're up between 10 to 20%. On the other hand, IT, pharma, they're down about 10 to 15, 20%. Even metals, of the things is flat. So I think the message is that given the disparate growth that we see, one has to select the sector and stocks carefully to generate material performance. Overall market, because Indian markets are a mix of both global and local sectors, and global outlook is soft, overall market may remain somewhat within a band.
Okay, so the market may remain range-bound is your view, but give and take everything, it's been 8 straight days now that foreign investors have bought into the Indian market. So at least compared to emerging market peers, has India started to look attractive on a valuation and a growth parameter? And if yes, do you think this outperformance is something that can continue?
Sure, I think first on the emerging market comparison, I think there is no doubt. First of all, the emerging market complex looks a bit more attractive. Although, you can look at more bottom-up basis, but just for the sake of top-down, I think US dollar looks like it has picked out. Rates peak inside. Commodity prices are flatlining. So therefore, I think all this sets up a good background for emerging markets. Now, within emerging markets, India was overvalued if you go back 6, 7, 8 months as compared to not just the relative valuation. But through markets in consolidation since some time, through this consolidation, we believe that the overvaluation that one was talking about is kind of knocked off. And if think of it this way, last 1 year, Indian markets are 2%, earnings have grown 12, 13%. So in effect, in real terms, you got a correction of 10% on valuation, which is quite good. Also, the bigger picture now, when we look at India versus the emerging markets, the bigger picture continues to be what we have been saying for last few years now, that formalization, digitalization leading to lower fiscal deficit, better manufacturing will lead to better current account. It has come at a positive surprise that the services exports are already doing so well that the current account already below 2%. So overall, the message is savings in the economy is getting higher. And with this savings investment cycle, there's adequate savings there to go for the investment cycle when the global environment is that global multinationals, global companies are looking for an alternative sourcing base. So all this sets a pretty interesting background for the Indian economy as such. And if you're looking at the domestic facing sectors like banks, industrials, I think it sets up a pretty good background.
All right, Mr. Gupta, for the Indian markets, do you still believe that we could get high single digits to double digit returns for 2023?
I think high single digit to low double digit return for the world market is quite possible. I think it's because the valuations have corrected as we have mentioned. So I think it is fair to assume that markets will give return overall in line with the earning growth. But we are really focused on domestic facing sectors where we think the opportunities not just for 1 year, but over a 3-year perspective, the opportunities look pretty good.
So you're focused on domestic-facing sectors. Does this mean you're staying away from, sectors like technology? I ask because TCS will be officially kickstarting the earnings season today, and it's not looking like it's a great picture this quarter around. How are you feeling about it, and would you stay away or would you go all in now?
I think for the Indian IT services sector, you will see a slowdown in revenue growth on a year-on-year basis, which means, last year was a double digit, this year probably mid-single digits. That's a material slowdown. Of course, these companies have fantastic margin levers. So I think they will manage those. They can still deliver decent VAT numbers, but I think overall earning estimates are still, I think they will meet or barely meet, or there could be scope for some downside revision for the overall sector as such. And we were mentioning that we do find much attractive opportunities outside the external facing sectors. I mean, if you think about, for example, banking, industrials, even real estate, I think the earning outlook trajectory, we feel far more confident, and the valuations are also not that expensive.
Okay, we'll leave it at that. Thanks for joining in and have a great day. That is the word coming in on the markets. Well, let's take a quick break. Lots of stocks to talk about. So without wasting any time, head into a break. Come back with the entire research team and give you the list of top 10 stocks for the day. Stay with us.